tuning in and attending, and for those of you who will do so at a later date and you're watching a recorded version of this, this particular webinar. As Alex has pointed out, he rightly said that, that we have some of the foremost investors in the cannabis space right with us, certainly two of us, and that's not including myself. I'm here as the moderator, and I'm delighted, frankly, to have both Rob Sechrist and Matt Hawkins. I will get them to introduce themselves and the work that they're doing in this space before we jump into some questions. I should remind you all that for those tuning in live, there is an opportunity for you to fire questions to the panelists, including myself, should you wish, and you can do that through the various mechanisms that you have at the bottom of your screen. The three of us are tuning in from the United States. I know that most of you are tuning in from other parts of the world, so good morning, good afternoon, good evening, good night, if indeed that's, if you're that far east from where we are, which is pretty much on the west coast of the United States. So it's early morning for us. The three of us, I understand, are all caffeinated. We're ready to go, and so we're looking forward to that. Before we dive in, a little bit about myself. I'm the co-founder of a group called Regennabis. We're a professional services firm that is firmly centered in the cannabis industry. We advise, we convene, and through our investment services, putting ourselves right in the mix to try to help this industry grow up in alignment with sustainable development narrative. And a lot of the work that we do is underpinned with the United Nations Sustainable Development Goals and some of the frameworks that we use with the organizations we interact with are really to help them with their environmental, social governance frameworks to really help them think through how they can really develop powerful strategies, powerful financial operations, as well as their general operations to be leaders in the industry. I'm formally I call myself a corporate refugee. I was once upon a time a partner with Ernst & Young out in Hong Kong and in China, spent a decade out there in what we used to call the Wild East. Now we're in the Wild West with the cannabis industry. So let me hand over to Rob Sechrist initially, just to introduce himself. He's president of Pelorus Equity Group. Rob, the mic's yours.
Thank you for the introduction, Geoff, and it's a pleasure to be here. Just a little bit about us. We're a value-add bridge lender solely focused on the build-out and stabilization of cannabis use properties. Since 2016, we have originated 47 transactions for more than 150 million with 21 payoffs. Our primary vehicle to fund these transactions is our private mortgage REIT that was launched in 2018 and now has over 120 million in senior secured notes at an average of 15.25% note rate for 18-month terms. So we're just here to build out these properties for the cannabis use tenants and helping bring in the capital that's necessary since 2016. Thanks.
That's fabulous. Thanks very much, Rob. And Matt Hawkins, who's the founder and managing partner of Entourage Effect Capital. Matt, again, the mic's yours.
Thank you. And Geoff, good to be here. And Rob, always good to see you. Entourage Effect Capital has been investing in the cannabis industry in the United States and in a couple of other countries, Israel and Europe, since 2014. We've made over, I think, 66 investments to date out of 2 different funds, several special purpose entities, and we're currently raising our 3rd fund. We've got over 200 million under management in only cannabis assets, which makes us one of the most prolific, if not the most prolific, cannabis investor in the United States. And we are really excited about what's on the forefront with what we feel like is a real pathway to legalization in the United States.
Yeah, thank you ever so much, Matt. I have been a big fan over the years of the work that's being undertaken by yourself and your colleagues at Entourage Effect Capital. It was
Well, quick sidebar on that. We were, for those of you that obviously don't know, we were formerly called Cresco Capital Partners, and Cresco is Latin for grow. And it turns out that back in 2014, there was another multi-state operator that called himself Cresco Labs. And the founders of Cresco Labs and me were laughing for 2 years about how funny it was. And then we just got sick of being confused with one another. So we decided to change the name.
Great. Well, as I say, the appropriately named Entourage Effect Capital is great. And for those of you who have no idea what I'm talking about, it's called Google. Go take a look, have a look at Entourage Effect, and just get yourself familiar with what that really is all about. And it really does help harness, I think, the ideologies and the work that Matt and his colleagues. This industry, aside from the fact that I think that there's a huge opportunity, those people who know me, they know that I'm quite attracted to puns. This is probably the most pun-oriented industry out there right now. And so when Alex and the team threw at us this notion of the title for this is the grass greener for investors? Really? So with that, the question that I guess we'll first pose is, what's driving the growth of the legal cannabis sector? And let's go in alphabetical order. Matt Hawkins, why don't you take it away?
The growth is right now with what happened in the United States during the presidential election, and then what happened in January with the Democrats taking control of the Senate through the runoffs in Georgia. There is for the first time, there are true tailwinds on the legalization front that even pragmatic investors like us can see. And when that happens, whether it's through full legalization, quasi-legalization, or maybe even what's known as the Safe Banking Act here in the States, that's going to bring in institutional capital in a big, big way. And so for investors, both with Rob on the real estate side and for us on the private equity side, it's effectively a built-in exit, because what happens is you have the Blackstones, the Goldmans, you have the big pharma, tobacco, alcohol, CPG companies. They're all chomping at the bit to get into this industry that they can't participate in now because of the federal illegality. All the things that Rob and I do on a daily basis are driven by the fact that this is a opportunity that won't exist, in the not too distant future, and that opportunity to capitalize on the returns that are there right now is frankly unheard of. And so that's what's so exciting about it.
Mm-hmm. Absolutely. Rob.
Little side point on that. These big institutions, ironically, some people may not know, they do have vehicles already currently available. We had a BlackRock come to us very early on. Now, we're in an ancillary sector in a sense because we only lend to the owners of properties and we're not directly plant touching. So, but the fund that they were using had the ability to go into equity. So these guys are already there. But it's definitely a growing industry. We see the political change that happened with the new administration, and especially the House and the Senate being controlled by the Democrats being very favorable tailwinds. My personal concern, and I'm slightly less bullish than my peers, is I feel that if the Biden administration was truly pro-cannabis, as everybody had speculated, they would have reinstated the Cole memo or put something similar in place day one to signal that to the industry, and they didn't. And so I'm a little bit, I just think that it's going to be tough to get enough senators to come on board that will get the Safe Banking Act or whatever it might be to deconflict cannabis policy through the Senate. And I know Cory Gardner, who did the States Act with Elizabeth Warren, and he had enough Republicans to get it through at the time, but it was an election year and you couldn't push it through for other political reasons. So I'm curious to see if they do get it to the Senate, if those same senators that are now having such fights between Democrats and Republicans are willing to sign on and do anything for the other party. So I think there's more going on politically here that I just don't know if it's going to happen as everybody assumes that it's a given. I think that there's a couple of things here that are not in the political calculus of most retail investors. When you get into politics, you have all kinds of other things that have nothing to do with our business that come into play.
Yeah, I want just to
Sure.
add on that, because I actually agree with Rob from a timing standpoint. I think it's very the people that say that it's going to happen, this year or even as early as next. I think to Rob's point, aren't taking the politics to heart, but I do think that it's becoming enough of a bipartisan issue that it'll at some point in the not too distant future become a realization. And so when I say a pathway to legalization, what I really mean is, this time last year, I was thinking it might be 4 to 7 years. Well, now I think it's more like 3 to 5 years. And so what that means for us, especially in our next fund, is that that's right in the middle of our investment period. And so as a result, the investments that we're making in Fund 3, we're going to be writing bigger checks. It's a $150 million fund. We're going to be building scale in advance of that, because once that happens, when Blackstone and others really start writing the big checks for equity, they may be dabbling a bit, but once the New York Stock Exchange opens up, once the NASDAQ opens, then it's a whole different ball of wax.
Mm.
Agreed.
Yeah, these are great points, and I'm going to take a little pause and remember we have a global audience. I'm just going to very quick sort of a cannabis 101 for essentially this industry is growing up, and one could argue there are 3 subsectors within the industry. There's the recreational space, there's the medical and wellness space, and then there's hemp. In the United States, hemp is already fully federally legalized as a result of the 2018 Farm Bill. In recreational adult use, currently legal in 15 of the 50 states, and we'll add Washington, D.C., which is not fully a state. And then in medical and wellness space, it's currently 36 out of 50, but that's rapidly changing. And as both Rob and Matt have indicated, just yesterday, the day before, losing track of time, New York as a state has signaled that they are moving and will move ahead to legalization across those 3 sectors in their state. Now, you could argue that to some degree in the United States, it's a bellwether. I think as how New York goes, the rest may follow. I think it's a huge domestic state market opportunity. But putting all of that into context, around about the same time as the US election in November last year, a little soon thereafter at the United Nations with the Commission on Narcotics and Drugs, there was a vote on the descheduling of cannabis and to deschedule it from a Schedule 4 drug, an illicit substance. And as a result of that vote, which was narrow, 27 to 25, there was 1 abstention in the 53 states, but 27 states voted to deschedule. And of note, the G7 states, only one of the G7 states, Japan, said no on that vote. And if we look at the G20, 5 of the G20 voted no and 11 voted yes. So there is a significant bellwether, if you like, at a global level to indicate that this industry is moving with pace and there is an appetite. And I think that's something that we should look at and bear in mind, that as the US really embraces this, certainly in the next year or 2 years, you can imagine then that other countries will line up. And I think that's a huge opportunity in the investment space. So it's just some context there. Back to some of these questions then. Given what we're talking about, why are asset valuations currently so attractive then, given the growth potential? Rob, do you want to kick off with that one?
Sure. So we more look at it from a real estate perspective than because we don't own any cannabis entities directly, even though we do have options for warrants and convertible shares and things like that. But we look at it as that the amount of security we're able to achieve along with higher yields caused by the dislocation in the capital markets, is unsurpassed in the 20 years plus I've been in this real estate lending. There's no other asset class on a loan to cost basis, not loan to value, that you will see the ratios here. Our typical loan has no more than 18% of the face value of the note amount deployed day one. And that's because the majority of all of our borrowers had to already buy these properties out of pure equity. They didn't know who to go to. They had to start building them out of pure equity. And it wasn't until they got down the road or they're enhancing those facilities that they have found us to take some of that equity that was required off of their balance sheet to complete those properties and move it over to debt and use the equity that was already put out there. So on a cost basis, we did a transaction for Acreage Holdings last quarter for $13.3 million at 6 points and 16% and a free and clear property that they already spent $20 million. We're deploying another 13 million into it, so 33 million. On that property, we charge them on the full face value of the note at 16%, regardless of how much they've charged, pulled down. And over time, they'll start pulling that down. They're about halfway through it. And you might ask, well, why would they possibly pay those types of rates? And in fact, their senior management was pushing back very hard on us for that. And we showed them that if they were able to save just 1 week in time, they're in the money. And I'll give you the example. Our typical loans have 50 to 100 draws processed. We process them in 1 to 3 days. We save most of our clients at least 20% of time and up to 50% of time. This facility, our improvements would increase about 5 million per month. So that's $10 million of additional revenue that they would have been able to achieve. And our premium of our loan only cost them 1.3. So it's a no-brainer, and everybody just takes them a while to absorb. You need to look at the entire usage of funds and how those funds are deployed compared to other lenders, if there's even one available.
Wonderful, great, wow. Matt.
Yeah, valuations are, for the most part, and on the equity side, reasonable. And the main driver for that is the dearth of capital, and capital controls most of those decisions now. There was a time period in 16 when California went recreationally legal through probably latter part of 17, as if my recollection is correct, where the deals were controlling it because there was such a fervor of wanting to get into the cannabis space, and so valuations were unrealistic. There's been a reset since then, and now smart investors like us just aren't willing to pay the prices that some of these operators ask for initially in their valuations. And so when there's really only two or three other organized capital groups like us that are providing the equity, we drive the train. And so, again, until institutional capital is here in great prevalence, then that's going to continue.
Mm-hmm. If I could just ask a sort of sub question, given what is happening in, say, the last couple of weeks, we've seen investment into the industry from, for example, the acquisition of Jazz Pharmaceuticals, GW by Jazz. And then we've just seen recently, this last week or so, a significant investment into Organigram, a Canadian licensed producer, by British American Tobacco. Do you see also then corporate venture capital monies and monies coming from corporations also moving into this space at pace?
I do, but recognize that's a big difference. You're talking about Canadian companies that are fully legalized. I mean, Canada has a 100% legalized landscape in their country.
Sure. Mm-hmm.
So that is where institutional dollars flow initially. I mean, Constellation Brands, $5 billion investment into Canopy Growth years ago. That's because it was legal to do so. Yep. They couldn't make the same investment in a U.S. company at this point in time. So, to the earlier point that Rob and I were making is that only until it's federally legal or quasi-legal will firms like that be able to start deploying capital readily and openly in the United States.
Correct, but it does serve potentially as an indicator. Correct.
Absolutely.
Yeah.
Absolutely. I mean, look, to Rob's point, I mean, you know, these firms are already building teams ready to pull the trigger in mass when they can. So that,
Yeah.
I mean, if that's not an indication, I don't know what is.
Yeah, no, I totally understand that, for sure. Just coming back to our audience, why is the timing good then for family offices to invest in this space?
I'll start with that one. So for us, I think that all family offices that hold real estate assets would want to diversify into an asset class that is less affected by a real estate cycle or an economic downturn. And that was especially borne out during COVID-19, where the entire asset class had was deemed essential business in all the states that we operate in, and we were completely unaffected. And even if we didn't have such a high yield produced by our fund, I think that you would want to have a percentage of your real estate assets diversified into this sector because it's so much less affected during those types of things that affect other real estate assets. And in addition to that, the dislocation of the capital markets right now, we're able to get on some transactions, we're able to pick up equity, and we don't carry the downside risk. We've got the asset, we're not paying anything for that equity, or we only pay for it if we have options for warrants. So it's not the norm, but we do have it on a few of the transactions, and that period will probably extinguish over this next year of when we're able to get that, because the benefit to our tenants that we are helping moving the tenant improvements and equipment purchases off their balance sheet and over to the real estate owner's balance sheet is so significant that these guys are trying to move up in the line of our underwriting and our processing of transactions. They're offering equity just to get the transaction closed because they're leaving money on the table.
Right, well, yeah. Matt.
Yeah, family offices have an amazing opportunity here for all the reasons we've been discussing. But unlike institutions, family offices, even those that act like institutions and use the same processes, aren't constrained by the laws. And so if a family office decides that they want to exploit the cannabis market, both on the real estate side and on the equity side, this is the way to do it. And you would be hard pressed to set up a division of cannabis real estate lending and cannabis equity investing within your own office, because the one thing about the cannabis industry is it's cottage-like in nature. Rob and I've crossed paths on deals left and right because we're the only ones out there, and so we also know where the bodies are buried. We know who the good actors are, who the bad actors are, and there's a lot of them. And because this is a nascent industry, and in nascent industries, you've got situations like that. And we've gone to the school of hard knocks. Luckily, our first fund was a 3x for our investors, and fund 2 is still got a lot of activity and is trending to be something similar from a return standpoint. But because they were fun, they both had 20 some odd investments in each one, not all work out. And so the shotgun approach is a hell of a lot better than taking the rifle approach if that's what you were doing as a family office. And so partnering with groups like us are incredibly important, especially at this time where, look, you have a chance to come in and make a huge difference and own big chunks of companies through partnering with groups like us in advance of bigger institutions coming in down the road.
Right.
I would add to that Matt and I see more deal flow than probably anybody in our two separate distinct asset classes that we're in. It's to the point where we really focus on always the best assets and the best operators there are, but we get to go to the cream of the cream of the cream of the crop for us. We see so many deals a day that we're able to pick and choose. And it is a cottage industry. You do need to know what is out there. You need to know how to layer your documents to protect for different laws in different states, and how to be able to take security in these things, and what happens if that's not transferable. How do you get around that and make sure you can? And you wouldn't want to learn that on your own as a family office originating that transaction the first time. You'd want to have somebody that's seen thousands of transactions, originated or went through hundreds of transactions, and originated and had successful cradle to grave transactions where they paid off and had liquidity events or payoffs like we did.
Yeah,
That's exactly right.
yeah, these are great points, super valid points. I can also add, just from a perspective at Regennabis, for a few years now, whenever we have either been at or we've been associated with family office convenings, we were saying and chatting about this with Alex prior to going live, that in the last 3 years, we have seen in these convenings of family offices that outside of the plenary sessions, when we go to breakouts, the single biggest interesting space is the cannabis space. Most family offices flock to those breakout sessions. And one of the primary reasons for that is because the industry, whether it's in the recreational and medical wellness space or indeed in hemp, offers an opportunity also not only to provide economic returns, but social as well as environmental impact returns. And many family offices, of course, are thinking longer and more, and harder about how they can really get their money to work and to deliver across a sort of an impact investment landscape. And we see that as a fascinating area for growth, and certainly one that appeals to family offices. So that's another really cool space that's opening up. As we come into the final furlongs, we've got about 10 to 15 minutes to run. It seems a little odd to ask this question now, but what's the legality of investing in the cannabis industry sector? Is there anything else that we haven't already mentioned in these prior questions?
Sure. If I may start.
Go ahead, Rob.
For us, it went back to 2014 when the Rohrabacher-Blumenauer Amendment, and Dana Rohrabacher is our legislator here in California in our hometown. So we knew him. We were advocating for that, supporting him. And that specific amendment defunded the Department of Justice from any prosecution from a cannabis-related business in a medically licensed state. At that point, we knew we could lend in the sector if we wanted to, regardless of that. But that amendment gave us the comfortability that we could originate a transaction that was being built out for a tenant without the fear of them being potentially prosecuted by a rogue Department of Justice. And so once that amendment passed, and then subsequently has passed every year since then, and now it's gone into the omnibus spending bill, we felt comfortable, and our investors have felt comfortable that we have a protection that Congress couldn't even provide, that legislation is yet to provide. So we've already got what we needed, although we want the industry to move along and the capital markets to open up as well. But what we needed is already there, and that's for us. Matt might have a slightly different spin on it.
No, look, when I started the firm in 2014, there was real risk for the management company because, all we had in place was what was known as the Cole Memorandum, which was guidance issued by the Department of Justice that effectively allowed for, it went without saying that the Department of Justice wasn't going to come after you, but it was still federally illegal. And the amendment that Rob talked about that was just kind of the rider to the budget each year that kept getting added on was where things changed, because if you were medicinally legal, they weren't going to come after you. And then that by extension, we got comfortable with the fact that the tax dollars started being generated at the state level where it's recreationally legal. And that's when I knew that even though there was risk, it was worth it, because the states aren't gonna, once they start taking tax revenue, they can't get off of it. And that's what's happened now. I just read this morning that California alone brought in $1 billion in tax revenue in 2020, and the entire legalized country landscape of the United States is over $3 billion in tax revenue. So those are real dollars. And that's, education, infrastructure and other prize things that state legislators look for in their budgets are being helped and aided by this industry in a big, big way.
Yeah,
That's fascinating.
if I can add to that just a little bit, because this is such a narrow asset class for lending, there's very few players in the space that are doing solely focused on cannabis and specifically value add or bridge lending to build the facilities. We ended up since we were the first here to go out and aggregate all the data. So we know every single operator in each state. There's 9,600 approximately in California. There's 6,000 different entities that hold those 9,600 licenses. We know where those operators are, what real estate that they're in. We know who owns that building. We know who owns that loan, if there's a loan at all. We know what the license type is. We know what the average cost for that building was. We know when they acquired it. We roll all that up into a dashboard, and we're the first ones to know where are we at in this market? How big is this market from a real estate perspective? Because everybody else has looked at it from BDS and the other firms, New Frontiers. They look at it from a cannabis company side. So we had to go get the data ourselves so that we can be utilizing this in underwriting. We realized this was so proprietary because we're also scraping the building departments, and we know what is the square footage for each license type coming online in each state, each county, each city. And we actually can project out probably more accurately than most people out there what the actual production is, what the actual real estate value is across each state that becomes legal. So we're rolling across the nation, and we started with all the states that we're currently in, and we're doing all those states. So took it from the real estate side. There's other analysts. We had to do it ourselves.
Yeah.
It's about, and by the way, it's about 12 billion on the low side in California, up to 18 billion for the real estate assets, and 50 billion across the nation on the real estate side, just from bottom of the barrel valuations, just trying to pencil that number in.
I think it's fascinating what both of you have just said and referenced also, that to a large degree, this is really unknown, uncharted territories. It's like you guys, in the work that you have done over the last few years, have had to create your own resources around research and to understand what's happening, because for sure that infrastructure is just not out there currently. One would imagine that as the cannabis industry grows, then ancillary businesses like the information service providers, I'm sort of putting on an ex-Thomson Reuters hat that I used to wear, it's ripe for some organizational move into this space to then help others with their understanding of size of market, deal flow, et cetera, et cetera. So I think it's, aside from the cannabis industry itself, the ancillary side of it is really set to boom. I don't know if you have anything to sort of either counter that or agree to that. What do you say to that? Yeah.
All good. Yeah, no, you're right.
All good. It's happening.
Yeah.
It's happening, Gary. As we say, put your belt on, because it's going to move swiftly. I've got a question here from the audience, and let me just encourage others to please follow Clive Harvey's lead. He asks the question: can you explain the pros and cons of investment in medical versus recreational side of cannabis? Matt, do you wish to?
Sure. Look, there's obviously a huge component to the industry that is incredibly medicinally beneficial. Things are being discovered about this plant, almost on a daily basis that can, it's being now, like Ben Kovler, who was the CEO of GTI, was one of our first investments when they were private. Ben calls it an exit drug as opposed to a gateway drug. And what's happening is you have cannabis being used for people that are either hooked on opioids or other, big pharma strength prescription medications that are helping them manage pain either on a daily basis or at the end of their lives. And cannabis is actually allowing those people to live more normalized lives without the side effects. And so that's just an example, but I wanted to set the tone for what I say next, which is this. We are investing in the industry to drive returns for our investors, plain and simple. And if there are components to it that are in addition to that, then that is awesome. But the reality is the majority of our investments, if not all of them, are primarily recreationally based because the markets are bigger. It's just that simple. And I don't hide from that. It's just reality. But that's the way we look at it.
If I could just add to that, for us, the distinction between medical and recreational for us is only if the state is medical, because that gives us protection. You could still be invested in a recreational company, but as long as the state has a medical license, which they all do, they all go medical first or concurrently. So that's for us. And the other thing that's important from our side is a little bit different than Matt's, is that most people don't know that the use of the product is not distinguished until it's purchased. So the plant is actually grown the same all the way through. And at the dispensary, when the person purchases, if they put up a medical card, then it's medical use. If they put up a recreational, then it's recreational. But ironically, what we've been told from BDS and many others is that when the states go recreational, apparently nobody shows their medical card anymore. So it looks like it's more recreational because there's no reason to do it. So for us, we agree with Matt on the exit drug. We feel that we are trying to help this nation along with some of the opioid crisis by creating these facilities and legitimizing the industry and moving all of these properties. These properties already existed before we started lending on them illegally, and those properties didn't qualify for legal operations. So those are being migrated into the legal market, and we're just trying to bring some legitimacy to this industry that we feel that is going to be around for a long time and eventually deconflicted from federal policy.
Yeah, there's a great point. And again, there's another reference to BDS, and a shout out to those guys. Again, if you're tuning in, listening, watching, go to Google and just check out BDS. You'll see that they're at the forefront really of providing education and some insights into this industry. And that's a key word here, education. That certainly we think at Regennabis and most of the groups that we work with see this as a critical aspect of the build out of this industry. We need to follow the examples of Ben at GTI Green Thumb Industries, who frames it this way. We need to sort of dial the clock back, and we need to move beyond the prohibition era. And I think that that there is a role for global media to really get into the heart of this and to unfold, frankly, the decades of prohibition that has held back the opportunity for many people, not just in the United States, but around the world, to benefit from the medicinal value of this plant. And I think that's critical. And then just to add a little bit also in terms of the third sector that I referenced earlier. So we have medical recreational side. Hemp is fully federally legal, and there's great opportunities to invest in the hemp space. And I've referenced earlier the United Nations Sustainable Development Goals. At Regennabis, we see that an investment play in hemp to help build out the industrial hemp engine, for want of a term, will be a significant opportunity for humanity to address some of these challenges, whether it's poverty, whether it's hunger, whether it's gender equality, or indeed other inequalities, including, of course, challenging and addressing some of the issues around climate. And hemp is truly an amazing plant, and that's just some other sort of view and some other aspect that I think that if we, as investors, we start putting our minds and hearts into some of that, and then follow with our wallets and our bank accounts, then I think we'll find that there's some significant upside for everyone. So I just wanted to reference that too.
We would agree with that. We think it's a great aggregate, all kinds of uses for that. So.
Yeah, well, thank you. And one of the things that at the end of in October later this year, we will convene a group, the ecosystem, if you like, at the United Nations to really talk about how cannabis and hemp is at the forefront, this once in a lifetime opportunity we feel, and how the investor world really needs to be in the room, needs to be part of this discussion. And certainly I think my co-founder colleague Patrick, we'd love to have Matt and or colleagues from Entourage Effect Capital as well as Rob in the room, because it's again you chaps who are at the forefront of this space, who really can demonstrate what the art of the possible is if we get this industry right. I think that's, I commend you for the work that you've done. We're at the top of our time, I'm afraid. It means coffee is just around the corner for me. Thank you ever so much, Rob, for your words and again, all of the great work that you're doing. Matt, similarly to yourself, Rob and myself, we're going to peel away. Matt is going to stay and he's going to do a one-to-one with, one-to-many, I should say. So he's going to take over and run the show from here on in. Matt, once again, thanks very much. Say hi to all the folks at EEC, and all the very best to you both, and all the very best to the audience for tuning in.
Thank you. Thanks, Geoff. Thanks, Rob.
Thank you. Thank you very much.
Okay,
Bye-bye.
thanks, guys. Bye.
Thanks.